You're listening to Ideal Practice episode number 144. Today, guys, with my guest, Danielle Hayden, we are going to talk about all kinds of really sexy things like tax strategy and bookkeeping and who you need to have on your money team. Don't roll your eyes. Don't click off. You need to hear this, and I actually think you're going to kind of enjoy it. So, stay tuned. Hi, I'm Wendy Pitts-Reeves, and with over 2 decades of experience in the private practice world, I've built my 6-figure business while learning a lot of lessons the hard way. This is the first podcast that shows you how to apply the principles of energy, alignment, and strategy to build a practice that is profit-centered, but people-forward. This is the Ideal Practice Podcast. Hey guys, and welcome back to another episode of the Ideal Practice Podcast. This is Wendy Pitts-Reeves, your host, and I am so happy to be hanging out with you here today. As always, we are full on into April, which is my favorite month of the year because things are so freaking beautiful where I live. East Tennessee just comes alive in April, y'all. Like everywhere you look, things are in bloom. And if you have never had the pleasure of visiting the Great Smoky Mountains National Park or the area around the park at this time of the year, by golly, come on down because it is absolutely spectacular. Now, what I don't love about April so much is it's also tax season. I know, but this is a reality, right? We got to deal with. And part of learning how to run a business and to be a successful practice owner is learning how to understand taxes. Learning how to understand lots of things around that. So that's why I brought on today's guest, Danielle Hayden. Now, Danielle is a co-founder and CEO of a company called Kickstart Accounting. It's a bookkeeping and accounting firm that helps 6-figure entrepreneurs understand their numbers so that they can grow a profitable, enjoyable, sustainable practice. This is what she talks about, the same thing I talk about. What I learned in this interview is she doesn't just work with 6 figures. She works actually with all different levels of business, from small startups to, single person shows who are in the 50 to 75K range, all the way up to multiple 7 figures. She covers it all. With at least 15 years worth of experience and more in finance, Danielle knows the complexity of business finances. And she knows that entrepreneurs need more than just a bookkeeper. They actually need analysis and support to understand or to create the kind of sustainable wealth that she thinks, and I agree, they deserve. She brings a fairly unique perspective. She provides business owners with like the total package. And she's been on a lot of different podcasts. I am super happy to have her here. She's been on several other top-rated shows like The How of Business and Female Empowered. She has her own podcast I want to mention right here at the top called Business by the Books. You will hear me ask her about that during the interview. I just think she has a lot to teach. But what I really loved about this episode that you're going to hear if you stay with it all the way through, we did talk about the money team that you need. Who are the advisors? Who are the helpers that you need to help you manage the money side of your practice? We talked about that a lot. We talked a little bit about tax strategy. What are some things you can count off that you've forgotten about? Or what are some things some common mistakes people make around businesses and taxes that perhaps they're not thinking about? We did talk about all that too. But the main thing that she said that I love so much was that she is all about basically helping us to stop feeling so ashamed of ourselves because we don't get this. Stop sticking our head in the sand. Be willing to come and ask for some help and learn how to do this. Learn how to understand the financial side of your practice because that also is part of what it means to be a business owner. I would say this is part of being a leader in your practice. You really do need to understand this. But there is no judgment at all from this woman, and she has seen it all. So I really, really love that. I love that so much, in fact, that I'm probably going to be referring people to her because I was really, really impressed not just with the technical how to that she and her team brings to this work, but with the energy that they approach it, the alignment that I feel like she has with integrity and with the spirit of what it means to be a successful practice owner. So it was really a great conversation, and I hope you enjoy it too. So enough of that. Let's go ahead, shall we? Let's get in to the interview. All right. Hello, everyone, and welcome back to another episode of the Ideal Practice Podcast. I'm so glad you're here. We have a different topic for you today. This is going to be a little bit more strategic than I often am talking about here, but it's going to be some stuff that I think you have never heard before because we don't actually cover this very well on this podcast. So I'm going to try to do something about that because we're in the middle of tax season. Seemed like a really good time to be talking about tax strategy, as well as some broader points I want to make with you about numbers in general, because I know how much you all love that. Yeah. So you've already heard a little bit about my guest today, Danielle. Let me go ahead and say hi to her. Danielle, come on board and say hi to everybody.
It is so nice to be here. I promise you, we're going to make this conversation really fun and approachable.
Oh, that's good. I love that. Yeah, because you know these people. They're like, oh, please, do we have to talk about that?
I know. I'm like, don't leave me yet.
Don't make me do that. That's great. Well, let's start off by just tell people a little bit about you. Like, where are you? Tell me a little bit about your work. Who do you help? How do you help them? Let's start with that.
So I am, I'm here in Cleveland, Ohio. I was just complaining about the weather before, before we got on. I will be complaining about that until like June.
I'm south, honey.
Yeah. I started Kickstart Accounting 10 years ago, and we help entrepreneurs understand their numbers so they can make better business decisions. So the goal is really, let's start using numbers throughout the year. When we show up to tax season, added bonus, we're confident, we're in control, we're organized. But as business owners, we're comfortable with the information because we've already been using it to decide how much to pay ourselves, when to hire. So my background, I was a chief financial officer, CFO for some mid-sized businesses. And I realized I had a knack for explaining how to use the numbers to make business decisions. And while I sat in the boardroom for years, I said, every single business owner deserves to have access to this information. So it shouldn't be exclusive to the people who could afford an entire accounting department for an entire CFO. It's not for the PE firms. It's not for the big companies. Every single business owner, regardless of how small or big you are, should have access to the same information.
So you were in the corporate world and then left to start your own accounting firm, right?
Correct.
Okay. And who's your audience? Like, who do you mostly work with? Obviously business owners, I'm guessing, but is it particular type, size, structure? Like, who's your audience?
So we do have our pricing works, it scales depending on how big or small you are. So we do have pricing and teams set up to be able to accommodate somebody who is a solopreneur. Our plans start under 100K mark. So if you're a business owner bringing in 100K per year, we have bookkeeping plans that start about $175 a month. Then from there, what we find is that there is a different set of problems and issues for business owners who are under 100K. Then we have that 1 to 250 mark. So we also serve that audience really well. You're often hiring your first few team members, your admin staff, VA. We're often our clients' first hires because you don't know if you can afford to hire the other people until you have numbers in place.
That's right.
And then we have services catered to the 250 to 500 because you have a different set of problems. You're expanding your team. You might be becoming an S Corp at that point. So no matter where you are, you need bookkeeping. But as you start to hit the around 750 mark, your problems change. And that's where we have our fractional CFO services, for those clients who are starting to hit 750,000. You're maybe expanding, you have more than one location, multiple employees. And then we serve those clients with our CFO services. Tax, as long as you're a bookkeeping client, we can always do your tax return.
This is interesting right off the bat. Those of you who are listening, some of you are going to be thinking, yeah, 750 and up, like who's that? But y'all, if you've been following this podcast for a while, then you know I have interviewed some people who have 7-figure practices. It does happen. And I've talked to folks who have large group practices that have sites in 3 or 4 locations around their state. Just a few weeks ago, we interviewed Gary Katz out of New York, who is literally expanding around the country. So there are going to be folks in this world who need exactly that kind of work. But I also want to highlight like a lot of folks are making 50,000, 60,000, 80,000, depending upon where you are in the country. And may not think that they need anything like this, like, or even want to stand talking about it, honestly. Like the least favorite
Those are two different problems.
Yeah, they really are 2 different problems. That is so daggum true. So do you mostly work with women, or do you just really, it's just like anybody who can use this? Yeah.
So our marketing, like if you go to our website, we are geared towards women. What we find is that money's difficult no matter what. Like money's a tough topic. It's hard. I don't know about you. I grew up with my mom saying, you don't talk about religion, politics, and money. So we don't talk about it.
Yep.
It has been easier for our clients who are women to come and work with my team. So I have an all women team, other than our IT guy. Our whole team of bookkeepers and accountants are all women. And we do that very strategically so that we have a team who can speak to our clients. Now, they can speak to men as well.
I love that.
And we do work with men. Yeah. However, we find that women want to talk to another woman. It lowers the threshold. Like, this is already scary. I already feel like you're judging me. I don't look, most people in this industry, they're not trained on how to handle finances, right? Like you're good at what you're good at. You're not taught to do the rest. So how cool would it be to have a team where you can be like, hey, I know you explained this to me the last 4 months, but I really have no idea what you're talking about. Can you explain it to me again?
Good.
And then they're like, that. I'd love to, because that's it's so excited. Like, yes, let me show you how to read this, because I'm so excited to read it to you. And I'm serious. I just got off a team meeting, and they were all going on and on about how much they love to work with our clients and help them understand this information. And so,
oh, y'all, this is cracking me up, because first of all, it's crazy that there are people who love doing this at all, and then that you get excited about teaching it. That is kind of a rare thing, I think. That's like one of the coaches I did the most work with for a long time she used to tell us that when she started working with a bookkeeper or a financial planner, all those different aspects that she said, and she was a 4 on the Enneagram, for those of you who know what that means. Like she was a singer-songwriter, she was a creative, super left brain. And she would go to her bookkeeper and say, all right, I'm going to ask you a lot of questions because I don't understand this. And your job is to not make me feel stupid. Yeah. Like, I don't understand this, and you have to work with me here. And if you make me feel stupid, I'm not going to work with you. Right. So, which I loved, because on the front end, she's saying, this is what I need, because we do feel stupid so often. It sounds like your team knows that. Yeah.
Yeah. You're not alone. And it's literally one of our core values is respect, and it is no judgment. So when we're getting on a call with a client, they're literally part of our core values that we screen for is that we're not going to judge one another or a client for not having that information. The other thing I'll say is that most bookkeepers and accounting firms, if they even send you financial statements, they're sending you financial statements that you'll look at them and you're like, what the hell does this mean?
Yeah.
Right? Like, this makes no sense. And so we've created what we call the snapshot. And it's a high level overview of your numbers. So there's lots of charts and graphs where we pull out the numbers, we analyze the financials before they even get to you. So by the time our clients get their financial information, all they really have to do is read the snapshot with all the charts and graphs. And clients are like, I never want to see another financial statement again in my life, because I don't have to.
Huh. Okay. But they have a
Yeah.
picture. So they still know something about
Oh,
what's
they
going
know their
on. Yeah.
numbers. They know
Yeah.
their
Yeah.
numbers.
Yeah. One of the things you said to me when we met before, as I recall, you said something like, if you're a business owner, not only do you have a responsibility to understand your numbers, but this is how you get your power back as a business owner. Can you just talk about that a little bit? Because I think that's a piece that we forget. I think oftentimes it's like the whole know your numbers thing is just, it just feels like drudgery or a should, as opposed to, and we think about it as like, I know that's something I need to check off on my task list. But the point I heard you making was that not only is this, yes, of course, you have a responsibility. Yes, this is real. This is part of owning a business. But also, there is a win on the other side of this. There's a benefit, and you're going to like the way you feel on the other side of that. Can you tell me a little bit
Yeah.
more about that? Yeah.
So I don't actually think we talk enough about it being a responsibility, right? Like a lot of
Mm,
people are like, I'm just going to put my head in the sand. I don't understand this numbers thing. I'm not good with money. And so they don't do it.
yep.
And then they go to their tax account and they just,
Guilty. I was
yeah,
that for a long time. Yep.
yeah.
Yep.
And no shame in me saying this, but we
Yep.
just drop off the statements. We give no regard to our CPAs. And we're just like, okay, here, do my tax return. We probably
Do
don't
your
even,
thing. Yep.
yeah. And then we don't even
Yeah.
read the tax return, right? Like they put all this
Yes.
work into that. We don't even read it. I'm like, okay,
Mm-hmm.
done. It's done.
Right.
And I think that the minute we start taking money from a client, like that moment, I don't care how small you are, that moment that you took money, you took someone's money, you now have the responsibility to stay in business.
Hmm.
You're responsible for their money. When you sign the lease, when you sign up for Zoom, when you sign up for a vendor relationship, when you're doing those things, you have now created a responsibility to them. And if you don't understand your numbers, you're not going to stay in business. You won't be there for your clients and you won't be there for your vendors. People are
It's so true.
trusting in you,
Yep. Yep.
right? And you
Yep.
you are creating distrust between you and your clients. Like when you put it that way, you're like, oh, okay, hold on. I need to know this information to stay in business. Now, the flip side is, to your point, positive. I know I always punished my son and I'm like, okay, hold on. I need to give him the reward.
Well, but the point you're making is a good one. And the way, and I think you're right. We don't talk about that enough. The way I say it is that you are creating your own economy.
Yeah.
That you are paying the vendors that you pay when you pay for Zoom, like you said, or when you hire a VA, you are helping somebody else put food on their table somehow or another.
Yeah.
That is a difference you're making. But you also just said you're not going to be in business very long if you don't tend to this. I will say people, I mean, they limp along. You may sort of halfway be okay, but you will be barely surviving. And what I see all the time that I know you're going to relate to is it will impact the quality of your work because you will
Yeah.
begin to resent your clients or you'll be
Mhm.
exhausted and burned out because you're not paying attention to this part of things. And then it becomes a therapeutic issue. It's part of the work. That's what I
Yeah.
think we need to talk about. Yeah, you're right. I 100% agree. Yeah.
So then we
Okay.
get our power back. So once we
Yeah.
understand the numbers, okay, so that's the transformation that we watch our clients go through. I just
Mm,
recently recorded a podcast with one of our clients on our show, and I asked them specifically, like month one, you didn't know what any of it meant.
right.
She's
Right.
she's like, honestly, Danielle, she's like, it felt like a puzzle. Like I
Yeah.
just literally dumped a thousand piece puzzle at you, and you guys created this picture but I couldn't actually see the picture. You remember
Mm-hmm.
those 3D pictures where when you looked at them,
Yeah.
you had,
Yeah.
like look through it to see what the
Yeah.
actual image was. She's like, that's what that felt like.
Mm,
And then over time, not month two, not month three, not month four, but over time, I got more and more comfortable with looking at the information. And then
yeah.
suddenly I was like, oh my God, I can afford to hire. And I should have hired someone 6 months ago. Oh my gosh, I wasn't paying myself enough. And
Yep.
here I didn't take my kids on vacation, but I had enough money. I just didn't
Yeah.
know I had enough money.
Yeah.
And all the opportunities I lost out on. She's like,
Yeah.
I feel embarrassed that I limped along
Mm,
when, as soon as I understood those numbers, I felt like, man, I have a real business.
I love
You
that.
know,
I love
like
that.
this thing's
Yeah.
profitable, which means it's real. And
Yep.
I can hire other people and I can
Yep.
pay myself and it can take my family on vacation. Hold on. I just flipped my whole mindset.
Yep.
And suddenly I have control, I have power. I can set goals, I can hit goals. It's this
I love it.
beautiful transformation we get to watch clients go
I
through.
love that. Yeah. You know what you can do, and you can do it guilt free. You can do it with clarity. You can do it with confidence because there's no secrets here. You know exactly what you're doing. That's lovely. I love that. Yeah. I had a therapist join my practice once along you just reminded me. I ran a large group practice for many, many years. And I had a young therapist join us one time and I was asking her about her goals. Why did she want to even move into private practice at all? And like, why do you want to do this? Because it's not for everybody.
Yeah.
And she said, I don't want a whole lot. I just want to be able to take my kids to Disney next year. That's my goal. If I could be the one, she was married and her husband had an income. So she's like, it's okay. I just want to be able to take my kids to Disney. and I can remember saying, I think we can get you there. she's
Yeah.
she's way, way, way beyond that today. It's really funny.
Yeah.
I love that. So you've mentioned a couple of things. You've talked about bookkeeping. You've talked about financial planning, CPA. Let's talk about the concept of a money team, which I know is something that you teach. What do we need as a solo practice owner, or let's say as a small group practice owner? Let's say either you're a one-person show, or maybe you've got 3 or 4 therapists, or maybe you're just beginning to build a small group. What do you need in terms of a money team?
Yeah. So I recommend we have 4 people on the team at all times, no
Okay.
matter how big or small you are. It all starts with bookkeeping. We have to have a bookkeeper on the team. And here's the problem. Any one of you who are doing your DIY bookkeeping, you are not a bookkeeper. I
Mm,
can't do what you do. I,
mm,
I can't because I didn't go to school for what you do.
yeah.
And you cannot be a bookkeeper because you don't know how to be a bookkeeper. And I can almost guarantee you, your books are wrong. We have seen so many clients come in who they're like, they straighten their spine. They're like, I think I'm doing a really good job. Like, I really enjoy processing the transactions. I love seeing where everything goes. I think I'm doing a great job. And those are the ones that we have to amend the most amount of tax years because
Wow.
they're overpaying on their tax return, they're misapplying payments, expenses are duplicated, nothing's reconciled. And so I say this bluntly, you're not a bookkeeper, you don't know how to do it. And so we have to have a bookkeeper on the team because from there, you're going to use the bookkeeping to do everything else. So if that's wrong, your tax return is wrong. Your financial plan with your financial advisor is wrong. You can't build a budget. You can't set goals. You're stuck.
Okay.
Okay. So bookkeeping allows us to look backwards. What just happened? And a bookkeeper, all your bookkeeper's doing.
I was just going to say, tell them what a
Yeah.
bookkeeper does.
Yeah.
Because you think you know, but you might not actually really know. Yeah.
So you're out making money, spending money. And your bookkeeper's in the background. We use QuickBooks Online with all our clients. So your bookkeeper's in QuickBooks Online and they are putting all the puzzle pieces together, right? They're keeping everything organized. They're putting it in the right place. They're making sure that the balance sheet's clean, that everything is reconciled, that it is accurate. So they organize what just happened. Your bookkeeper should also, and here's where like not all bookkeepers are created equal. Your bookkeepers should also be sending you a set of financial reports every month. So for all of our bookkeeping clients, they get their financial statements and a snapshot. Your bookkeeper should be having regular calls with you where they can answer your questions and you can connect with them. They should be celebrating your wins with you when things aren't going well. They should be somebody you can call and be like, oh, shoot, things really aren't going well.
Yep.
And
with no judgment, a judgment-free zone. Yep.
Yeah. Does that make sense? Is that
helpful? So they're literally tracking transactions for you.
Yes.
And categorizing them, right? So that you can see sort of a breakdown in that monthly financial report. That's an important piece. So you know how much you're spending on supplies, how much you're spending on team, like if you've got an assistant, what's your income, what you think your income is and what your real income is, right? Your revenue
spending on
versus
marketing.
Yeah. How much you're spending on marketing. Yep.
training.
Or coaching.
Yeah, training, coaching. Yeah, that's all in there.
Yep.
Yeah. Okay.
Yeah.
Number 2
Okay.
is your tax accountant. Now, your tax accountant, their only job is to file your tax return. Here's what happens.
Okay.
A lot of people start a business and they're told, well, you need a CPA once you start the business. And so our CPA ends up being the person we go to ask all questions.
Mm-hmm.
They don't know. They don't know how to answer all of your business questions. Their only job is to do your tax return. And most CPAs don't even know how to do bookkeeping and don't want to do bookkeeping. They want to file your tax return. So we need a tax preparer. Now, like we do both for our clients, but we have two separate teams. Our team of CPAs does the tax return and our bookkeepers do the bookkeeping. They talk, they commingle, they connect, they collaborate, but they're two different skill sets. And so they need to be two different people.
So team A prepares the stuff for team B in a way, right? The bookkeeper prepares it for Now, what's the difference between a CPA and a tax preparer who isn't a CPA? Because I used to have a tax preparer back in the day who was not
you
an
can
accountant.
get a certification through the IRS that you don't have to be a CPA. The CPA means that they went to school for a really long time and passed the hardest test I've ever taken in my entire life.
Yeah, full-blown accounting. Yes.
And not all CPA firms are created equal. So like we're not, just like you're not taught about business, either are CPA firms. So like I didn't have a single class on like how to run a business. I went and figured that out on my own. And so not all your CPAs are going to be the same. So how your CPA does taxes and how they connect with clients is going to be very different. What I hear from people is that they feel like taxes are this transaction. Like I send my documents into the thin air, like they go into the portal in Neverland. I hear back with some questions. Then all of a sudden this return shows up.
Pops up. Right.
I sign it. Yeah. And then if I have any questions, I email my CPA. They may answer. They might not. They might be on vacation for the summer. And they don't answer my questions very thoroughly. So we've taken the same customer service approach for bookkeeping for taxes. So we meet with our clients 2 to 3 times per year.
Even the smaller businesses? Do you do that?
Every single client. So for our tax prep week, we got to meet with you. We have to know that we're maximizing your deductions. I don't know if I'm maximizing your deductions if I don't know anything about you.
Yeah.
So I have to talk to you. Mid-year check-in, I have to know that you're paying your taxes. I have to make sure that you're in the right entity type. I have to make sure that you're paying yourself enough. We're not for everybody because some people are like, I am not talking to you twice a year.
Right. Yeah.
No. Yeah. But other people are like, I need to have a relationship with my CPA. So I just say all that to say they're not all the same. And you got to find the type of firm that you want to work with.
Got it.
Okay. All right. Number 3 is your financial advisor. So as business owners, we tend to hyper focus on this baby that we're growing.
Yeah.
And we forget that we still need to save for retirement. We want to invest in an IRA. We want to have
big
wealth
picture
building.
Yeah.
And that's business and personal.
Yep.
Right?
Yep.
So we need to have a financial advisor who is willing to talk to your CPA and bookkeeper. So again, you want to find someone who will connect with your money team and make sure that we're playing as a team.
So would that be somebody that you find through your bank or your credit union? Is it somebody is this through your stock or your investment company? Like, or do these people have their own firms, like accounting firms and bookkeeping practices? Yeah.
So most of them have their own firms, like a bookkeeping or an accounting firm. Yeah, we have a few people who we partner with. I don't have that certification. But you can usually find a referral from another business owner or
from your CPA, probably.
From your CPA, yeah.
Yeah. Okay.
We have a few that we partner with.
So this is just to clarify so far, y'all, just to make sure y'all are tracking. So bookkeepers track your transactions. They're literally just keeping up with what you're already doing. CPAs file your taxes. I would say that the job of a CPA, and you correct me if I'm wrong, is to make sure that you are paying what you literally owe, but no more than you literally owe. And one way I like to think about the whole tax thing is that the more successful you are, if your taxes are higher, that's probably because you're doing well. And that's a good thing.
Very
right?
true.
That's a good thing. Like you kind of want to have that problem, but you want to make sure that you're only paying what you really are supposed to pay. So that's what, and then the financial advisor. So this is kind of like zooming out is the way I'm thinking about this. Zooming out and watches your whole financial picture for your family, for your business, for all of it, and helps make sure that you are planning for your future in the way that makes sense to you and feels good to you. Got it. I'm with you.
All right.
Stuff is hard for me, so I have to summarize it.
I appreciate that. Yeah. I'm a talker, so
you're good.
Our fourth person is a CFO, and now not every business owner at every size is going to be ready for a CFO.
Okay.
So this might be a business coach, but a lot of times you have a business coach and a CFO. So a lot of times people will have a business coach until they're ready to add both people to the team. So we don't we don't ever replace a business coach. They're two very different things.
Yeah.
But what a CFO does is we start to look to the future. So you nailed it. Bookkeeping, we're looking in the past. CFO, we're starting to look to the future. We're there for people who want to start creating a budget, pay down their debt, get next level analysis, specialized key performance indicators, have that high level strategic conversations.
Yeah.
That is for the CFO. And so if you're doing $100,000 a year, maybe you're not ready for that. We notice a tipping point around that 500 to 750. Again, when you're growing to 3 to 4 people, we work with a lot of people in this industry, and we see the people who are having great success with our CFO clients or with our CFO team is that they have a team that they need to analyze, like who's profitable, which location is profitable, how do I pay down the debt from my lease build out? So they're the next level of future problems.
I haven't thought about that before. That's new to me, but that makes perfect sense. If your business is at a certain level of complexity, this makes me think about sort of like developmental phases of a business, right? Yeah. So when you're in that under 6-figure range, you're like, it's grade school, and then, right. And then you get from 6 figures. So 100K to 250, that's in more like high school, moving into college, somewhere in that range. School, right. Yeah. And what you need to understand, like the first 3 that you've named, you really do kind of need that all along, of course.
You do.
But as you move up, and I'm thinking about several people I know who are in that higher level, I am not there. I'm just me, like, right. I'm not, and I don't have the group practice I had anymore, but the people I know who do have that kind of business, I can totally see why you would need someone who is totally tuned into your business as a whole and helps you kind of watch the financial strategy of your business. Because I have heard plenty of stories who in fact, I was thinking about this sometime in the just last few days. I was thinking about a practice owner I know who is expanding and has multiple sites. And on the outside, looks like they're probably making 2 or 3 million on the surface. But what they're bringing home, I bet you, often is going to be like so much less than what it looks like, right? And there's a very big difference in the gross revenue that your practice is bringing in and what you're going to be bringing home personally. And if you're not careful, you can get yourself into trouble. I know that, and this also has layers, but one of my biggest mistakes that I have made, there have been many, but one of them has been like, oh, that's a business write-off. Oh, that's a tax write-off. Oh, I can buy that. It's a tax write-off. Why not?
Hurt my heart. Yeah.
Yeah. I can almost, it's almost like when you work in your favorite clothing store and all your paycheck goes to buy the clothes, right? What was going out was way more than was coming in because I could, quote, justify all of it as a business expense, right? And you can get yourself into trouble. And I've seen people who are making multiple 7 figures get themselves into trouble because they're throwing money at a problem and not having a CFO to track it with them. So that's a bit of a digression, but that's very interesting. Okay. Thank you for that. So most of you, like Danielle said, aren't going to be at that CFO level. But if you are, those of you who do have these larger practices and you are growing this is something you want to at least kind of have on the radar as something that at some point you're going to need to bring in. So to keep you from getting into trouble and making $1,000,000 and only bringing home 100K. So there you go.
Yes.
Yeah. So let's talk about tax write-offs since it's tax season. And you just said a minute ago that the people who are the DIYers, that they often are the ones who are making the most mistakes.
Mhm.
I was that person for a long time, and I got tired of fighting with Quicken, and I hired my bookkeeper, who is like a lovely human being who I'm incredibly grateful for, because I was so tired of how stupid I felt with Quicken. Tell me what mistakes we're making, those of us who think we can do this.
Yeah. All right. I'm going to start at the very beginning.
Okay.
First things first,
Okay.
we have to separate business and personal.
Yeah.
And for some people, that sounds very elementary. And you say, of course, Danielle, I'm doing that. There are so many business owners out there that don't. And
Yep.
they think, well, I am a solopreneur. I am my business. So I'm just going to write this daycare check out of my business account. I'm just going to pay for the dinner with my family. You have to have everything separate. So
really separate, really,
really
really
separate.
separate. Yeah.
Personal account pays for the kids' daycare, the mortgage, the personal vehicles, everything
Yep.
that is personal, it goes
Yep.
through your personal account. Anything that's a business expense goes through the business. So my daughter, laughed so hard. Growing up, I always used two credit cards at like Target, Walmart. Like, I don't care where I am. It would be the business expenses and then the personal. And I only had like two or three things that were business. And she's like, Ma, what are you doing? And I'm like, I'm just going to pay for it. She's like, now we know better than that. She put that divider right down. And I just didn't want to deal with it. So, but it's a good reminder. Like that's how much I want you to separate. The three things that are for your business, those are going to go on the business card, because why not take that deduction?
So you're standing at the checkout line at Walmart and you bought a box of pens and a bunch of groceries. You're going to separate those pens out from the groceries, and you're going to pay for them with a different card or a different check. Yep.
Yeah.
Yeah.
Yep. All right. The second one is really choosing your style. And there's two different schools of thought around taxes. And you kind of alluded to it before, and I didn't want to take us too far into a rabbit hole. You could be the type of business owner where the goal for you is just to pay as little in taxes as possible. You're doing your little thing and you really want to be able to just have that tax write-off. You want to take everything that you can, every meal, I don't know, every piece of travel. You
would be really aggressive about your deductions.
Yeah, like you're only going on vacation when you have a conference or meeting with a client, or you're air quote meeting with your board of directors who's really your family. I follow tax influencers on Instagram. The things that they're telling people to do are so wrong. That's option one. And that is a strategy, and that's okay, right? You want to pay as little as taxes as possible. You want to pay as little in profit as possible. Strategy two is that you want to build a healthy, sustainable, profitable business.
Yep.
Because if a buyer comes along, you want to be able to sell that business. You might not be thinking about selling your business today, but when somebody comes along and says, oh,
yeah,
this looks attractive. Well, you know what looks attractive? Profit.
That's such a great point, because I've also heard a tax strategy where people try to make it look like they're not making any money online.
Yeah. Oh, yeah.
On the paper. And I'm like, why would you want to do that? But they're like, because I don't want to pay taxes. Right. But you're right. If you're going to sell it, which, by the way, no one ever said to me, never in a million years did I think about selling a practice when I started mine way back in the day. I would have done so many things differently. Yeah. So you're right. You want to like literally be healthy financially, but you also want to look good on paper, like make sure it's strong, show the profit. I like that. Yeah.
And to keep going on that, you might want to buy a home. You might want to buy a vehicle. And if you're showing a profit, it makes it easier to have other life goals outside of your business. And you don't know what's going to happen in your life. All of a sudden, 3 years later, you're like, oh, I really wish I would have shown a profit because now I
get a
can't go do this thing.
Yeah. Yeah. Good point. Yeah.
Now, CPAs, nothing gets my goat more than when I hear a CPA tell a business owner in Q4 to go spend a bunch of money.
Which does happen. Yep.
It happens all the time because you're gonna have a profit. I had a client, this is like 3-4 years ago now. She came to us in the spring. So it was like March, April when we started working with her. And she had no cash and she was about to take out all this debt to open up her second location. And I felt terrible for her. And here's why I felt terrible. Because in Q4, when she was working with her last CPA, they had advised her to take out a large bonus to pay her team bonuses and to make a bunch of purchases in Q4 to lower her tax liability. Right. Now she has no money to open up the second location because the narrow focus was on paying less in taxes.
And right now versus thinking about the future. Yeah.
Right.
Yeah.
So having that balance to think, and that's our responsibility as business owners too. Like, hold on, wait, I can't go just spend all this money because I'm opening up a second location in March. Now, what she could have done, said, I know I'm going to have a profit, but I'm going to file a tax extension. So in March, April, I'm going to file the tax extension. I'm going to save for my taxes. I'm going to file my tax return over the summer, maybe even September. I have time to save. And then I could even go on an IRS payment plan, which is a lower interest rate than what she was paying on the loan that she ended up having to take out. So now we've just extended the tax bill that would have been due for the last year. Well, guess what, Wendy? She ended up having a tax bill the following year because all she did was shove expenses in 1 year instead of spreading them out over 2. So she ended up having a very large tax bill the following year. So all I'm saying is that we need to look at the big picture.
Yeah.
We can't just look narrowly at just saving money on taxes.
Yeah. And once you get behind, it's really hard to catch up. Okay. So think about how aggressive you want to be, but also think about the long term.
Yeah.
And make sure you're getting some really healthy advice about sort of balancing it all out so you're not in trouble at any point along the way. That's kind of how I'm hearing that a little bit.
Yeah. Choose the type of business owner you want to be. It needs to align with your core values.
Okay. Okay.
All right. Next is for our S Corp clients. So as your business grows, you have an option. So as LLCs, you are taking out owner's draws to pay yourself. So that business and personal checking account I was talking about. As an LLC, you transfer money from your business account to your personal account. That's what we call an owner's draw. You are not a business expense to the business. Right. You are literally just going up to the cash ATM and taking out cash. That's literally it. You are paying taxes as a flow through entity on the net income of your business. Very difficult because most of us grew up as employees and now all of a sudden we're an LLC. We're paying very different taxes.
Right. I have an LLC. And I used to call that what you're calling an owner's draw. I called that salary when I would pay myself from the LLC, from my business checking to my personal checking. I called that salary, but now I call it owner's draw. And you're right. And I pay taxes on the money that I'm bringing home from that. Right. Plus what's left after the deductions and everything for the business, the total profit. Yeah.
Now there's a strategy. Once your business is growing, you can become an S Corp.
Okay.
And it can be very tax advantageous. So when you're hitting around $75,000 a year in net income for 2 years, you consistently take owner's draws home and you are completely not commingling, right? Like you're really good about keeping those separate. You can become an S Corp, which means you are now on payroll, paying yourself a reasonable compensation. So when you go to get that mortgage or the car loan, you don't even need to tell them you're self-employed down and give the tax return. You can give them that paycheck stub. You are an employee of your business and it lowers the amount of net income that your business is paying.
Okay. And so I don't know a lot about S Corp. I know they exist, but I've never had that. So are you saying that once if you're running a clean business and you're up in the 75K and up in terms of gross revenue, is that what you're, no, or net?
Net income.
Net. So when your take home is in the 75K range and up, it might be time to start looking at an S Corp as an entity, as the type of entity you want your business to be, because then you basically treat yourself as an employee and you're on payroll. Okay,
Correct.
that's good. I have not heard that before. That's good to know.
Yeah.
Okay.
And this happens quicker than you think. So, you might be a business owner doing $150,000 in sales, but you only have $50,000 of expenses because you're not an expense.
Mm-hmm.
The only things that are expenses are your VA, your marketing team member, your software, the rent that you're paying. That's it. And so you get to that amount pretty quickly. We see at about $150,000 to $200,000 in sales, it's already tax advantageous to look at becoming an S Corp.
Okay. That's good to know. That's really good to know. Thank you. Okay, great. Okay.
All right. Last one. We talked about, not commingling business and personal. Did you know that when you go to Nordstrom, that the clothes that you buy, if you can wear it outside of the office and in the office, it is not a uniform expense?
Right. Are you seeing people who are trying to call things uniforms that aren't?
Oh boy. This is our client's favorite. Yes.
That's funny.
Yes, people love to use uniform. But I want to give you a strategy to make it a uniform. So if you want to go buy the really nice blazer and you want to put a logo on the blazer, or I this year I wanted hats, gloves, and winter coats for everybody.
Logo wear
that has logo.
Yeah.
That has now become a business expense. And we can do that with other things like gifts. So I started using this Remarkable, which
I have a Remarkable.
Love it. Now, if I want to gift that to somebody, if I gift that as an employee, I actually am not allowed to write that off per the IRS. It's too large for it to be a gift. But if I tell them you're going to use it for work, I upload some templates in there. I connect it to the Kickstart database, backup, and they are using it for work. That's now become equipment.
Right.
And I can gift it to them to use as equipment for the business. And so they might, I don't know, we did iPads one year. I don't know if the kids are watching TV on the iPad, not my business, but I know that we also put the tools on there for them to be able to use it for business. And so it became a business expense.
100%.
So there are strategies like that to make expenses a business expense.
To make a gift or a bonus for your employees or your team where you can count it off. Okay. Is there a limit to what you can count as a gift? Like if you wanted to give
the IRS needs to do some updates here. Yeah, it's really low. The gift expense is $25.
Wow, $25.
And then they say engraving, shipping is on top of that. So the core gifts can only be $25. For employees, it's $75.
Goodness gracious. So if you wanted to give your employees $100 gift card to take their spouse out for a dinner as a Christmas gift, you could only count $25 of that.
It really needs to be through payroll. Is the problem.
Interesting. Yeah. Okay.
That's the IRS wants it all through payroll.
Okay. Interesting. All right. So this is, do you have other favorite tax strategies for ways to lower your tax bill?
So we can talk about accountable plans and home office deductions. This is for anybody who doesn't have an office. So
a lot of people work from their home. We have telehealth as a thing, right? Yep. So talk us about that. Yeah. So
you'll see in this room, for me, I am in these four walls, and the only thing that ever happens in these four walls is work. Well, that's not true. I have a standing treadmill over here, but even that, I probably am working while I'm doing that. So everything in these four walls, this space, my business has to either pay rent for it or it's a home office deduction. But I don't do anything else in this space. If you're working from your kitchen table that you are also having dinner at, that is not a home office.
Okay.
But if you have a dedicated area, it could be in your living room, but it's a dedicated area of your living room. That is a home office. You
Okay.
can't have a facility. So if you are renting space somewhere that has an office, you can't also take the home office deduction.
If you work from your home office 2 days a week and you work from a rented office 2 days a week, one
Yes.
of
Or
those,
you have like a shared space where somebody else is using that office on those days and
yeah,
you have to work from home.
right. So then would you have a home office deduction then?
Correct.
You
Yes.
would. Yeah. It's basically your second office, or one of
Mm-hmm.
those is your second
Mm-hmm.
office. Okay.
Yeah. Yeah.
So I didn't understand something you said there. Y'all, you're gonna see Wendy tripping up here. Um, what did you say that you could not count as a home office? If it's not dedicated space, you can't count
If
it.
yes. Yeah.
Was there something else? I feel like I hear a phone.
No, if it's a shared space, it can be a corner of the living room.
Yeah.
Okay. And that the only thing that happens in that corner is work. You can take that percentage of your home. But if it's your dining room table and you're using it for other things, you can't take your dining room as your home office.
Okay. All right. That makes perfect sense. Okay. Good. Okay. So we talked about clothes. We talked about home office. And what about if you see clients somewhere else, but you do all of your bookkeeping, your marketing, your social media campaigns, you do all that admin work at home? I guess it doesn't matter what you do. It matters where you do it, the whole dedicated space. Yeah, never mind. Yep. Never mind. Ignore that question. Okay. Are there other things that people don't count off that maybe they are forgetting that some of the common things we tend to miss?
I think the big thing is just there's people who are scared of the IRS police, and there is no IRS police, but we're scared to take advantage of being a business owner. And so we're like, well, I might use that a little bit personally, so I'm just going to pay for it personally. And where that really should be a business expense, the percentage of your cell phone that needs to be a business expense. If you're using, I would guess that I talk more on this phone for business than I do for personal.
Yeah. Yeah.
But really actually taking those business expenses. So if the primary purpose of what you're purchasing is for business, then it is a business expense.
Yeah. Pay for it from your business account and count it. Yeah. Okay. The uniform thing makes me laugh because back when I first started my practice a long time ago, I had this whole conversation with my tax guy at the time, and I was married to a nurse who didn't wear a uniform because he worked in a psych hospital. He didn't have to wear a uniform, but he did have to have certain things, and we had a lot of conversations about what was required and what wasn't.
Yeah.
If it's not required, no, you cannot count it, right? And it used to bother me. What was it that used to bother me? Oh, one of the things that used to bother me when I first started my practice was when I lost money because somebody didn't pay for a session, or like insurance didn't cover a session, or the lost income, which I had a lot of in the beginning because I had no clue what I was doing. I lost so much money in those first few years, and I wanted to count that off as a loss. And my tax guy was like, the only way you can do he's there was you can explain this better than me. There's two different kinds of accounting, and essentially he said if you're going to count that as a loss, then you have to count it as an income first. That was money essentially that you had, and he said that raises your overall tax limit. Am I right about that? Can you help me with that?
You are right about that. So as you were saying that, I'm like, hold on, I want to have a debate with him, but okay. No, I do agree with him. So if most business owners are doing what's called cash basis accounting.
Yeah, that's it.
Meaning the moment that the cash hits your checking account, it's considered income. Yeah. The moment that the cash leaves your account, that's considered an expense. So if the cash never hit your account, it was never revenue. Mm-hmm. Now, some people are on accrual based accounting, where if in your system you have charged the sale, then that is considered revenue. And you would have what's called accounts receivable. You would have that would
Yep.
sit on your balance sheet. When the patient paid you, it would then clear off the balance sheet. If they never paid you, then you would take what's called bad debt expense.
Yeah.
Most business owners in this industry and of this size are cash basis.
Yep. Yeah. It took me a long time to get that. It made me so mad.
I do understand why you do that.
Like Blue Cross was supposed to pay me and they didn't. How come I can't count that? Well, you can, but it's going to hurt you in the long run. So it took me a while to get past that one. What are some of the more, this is interesting. This is a little bit broader than I was expecting to go, but I'm kind of enjoying this. And I think there's so many things like this we just don't get. What are some of the other mistakes that people like? What are the things we tend to count that maybe we shouldn't? Like you're talking about the home office thing. Mm-hmm. There's a difference if you have a spare bedroom that is your office versus if you're at the kitchen table. It's a different. Are there other sort of slippery slopes where you do need to be careful because you don't want the IRS police to come off or come after you?
Meals and vehicle is where the other place that I see.
Okay.
You can't write off every time you and your spouse go to dinner. Like, I understand that work occupies most of your brain. And you probably did talk about business, but if you are audited, do you feel comfortable with the amount of meals you deducted? Like, really? So I heard somebody on my team explain it once, and I really like this. How would you feel if an IRS agent was auditing your books? How would you feel explaining that expense to the agent?
Mm-hmm.
If you feel silly, then don't do it.
Right.
If you feel good and that feels logical to you, then it's fair. Your boat isn't allowed. The RV isn't allowed. Like, these are things that I see that I'm like,
justifying.
Right. Like, those are not justified expenses.
Yeah.
Vehicles that if you're not doing a mobile business, your vehicle is probably not primarily for business, and therefore it shouldn't be going through the business.
Right. Another lesson that you're reminding me of. I went to Ireland a few years ago, and I wanted to count it off as a business expense in some way. And so I had an assistant at the time who was really good at this kind of thing, and we found a place for me to talk. And I ended up giving a talk in Dublin while I was there, which was great because then I could indeed count part of it off as a business expense. Yeah. That was one of the things I had to learn then. So I could count the airfare to and from because I had to get there. And I could count, as I recall, the lodging and meals that were literally the day of the talk or like the night before the talk. But I could not count the whole trip off. I was over there for a few weeks. I could only count the little bit that was right around that day. True?
Correct. Yep, that is true. And that's where I think the slippery slope becomes. I heard somebody say, well, I'm having a board meeting in Orlando. And I said, okay, who's your board? Well, my wife, my mother, my mother-in-law, I don't know. The family. That's not your board.
No.
And you're not going for a board meeting. And I think it's wrong. And look, if you've done it, fine. I mean, no shame, judgment. Yeah. But like, that's not the approach I want to have. So for me, I want a healthy, sustainable, profitable business. So for me, I did go to Disney. I was speaking at a conference 2 years ago. It was in August. So I took my family, I dragged them to Orlando with me in August. It was deathly hot. And like, to your point, my flight was free, or not free, a business expense. Yep. My hotel stay was a business expense. My meals on the conference days was a business expense. The Airbnb that I rented the days before, the vehicle I rented the days before was not. Yeah. And so I actually don't often invite my family to travel with me because I mean, is it really worth having my business just pay for my flight? Because I have to drag my kids with me.
I was just thinking the other way around. Like, I always think if you're going to travel anyway, figure out some way to turn it into a business opportunity so that you can count part of it. So like, I'm thinking, so set up a networking event while you're there, like make some contacts with some local people in the area, find a way to give a talk in some way. So that I was thinking about what are some strategies you can use where you actually are doing things in your regular life, but there is a legitimate way you can tie it into business so that if you're proper about it, you can get a little bit of a benefit from it. Yeah.
You definitely can. You definitely
Yeah.
can. For me,
Yeah.
when I'm in business, I want to be in business mode. And when I'm with my
You like it
family,
separate. Yeah.
I want to be
Yeah.
100% with my
Yeah.
family. But
Yeah.
those are the options. Look, this business ownership thing, it's really cool because you can make those decisions and create the culture that you want to have within your business. And what are your core values? Who is your money team? Because actually, not all CPAs are as tolerant with that. We are not very. We always tell our clients, we're going to keep you compliant. We're not advertising. We're going to save you the most money by taking the weirdest deductions. We're going to make sure that you're compliant and that we feel, gut check that this return feels right and aligns with the core values. And that to me is very important.
Yeah. I love that. What that ties into, which is a good place to bring this, Danielle, is that I think the part of having an ideal practice, what I always say is that it's a practice that works as well for you as it does your clients. It needs to be something that serves you. Most of my people are great at taking care of their clients, but they're not so great at taking care of themselves. Absolutely. But having a healthy, profitable, sustainable practice is also a practice that is in alignment with your values. And I know my people. I know the people that listen to this podcast are people who care deeply about doing the right thing. In fact, sometimes they do the right thing to such an extent that they're hurting themselves. And that I think that's a whole nother thing. But doing the right thing in terms of the law, doing the right things in terms of tax strategy, being smart about it, and crafting your practice in a way that fits your personal style. I love that. So this was a great example of what you just said, that, I don't want to mix this. If I'm with my family, I'm with my family. If I'm working, I'm working. And I'm like, heck, I got to go do this anyway. How can we turn this into fun? So I was invited to speak to a conference in Pennsylvania a couple of years ago, and I turned that into a month-long camping trip.
Oh my goodness, that's awesome.
Because I'm always like, well, how can I make fun out of this? I want to make fun of it. I got to go anyway. How can I turn it into fun?
I love it.
That is great. Isn't that a hoot? That's a hoot. Well, thank you. This has been super interesting. We've touched on lots of little interesting bits that I'm hoping will be sort of informative for people and help them think a little bit differently about this. The thing that stands out to me the most is that you're going to feel better about yourself and your business when you really do understand all this. And so having the right money team in place. And guys, we actually haven't talked about that concept so much. I've mentioned it here or there a little bit. I've talked a lot about hiring help, because that makes a difference in all kinds of ways. But a money team in particular, I want to share a little story about this that I think is relevant, and then bring this together here. And several things, that Danielle, that you have said today make me think. I suspect that the people who work with your team and with your company are lucky. I really do love the idea that there's an all-female accounting practice. So, because I do think it's kind of like having a female doctor, I'd rather go to a female doctor, honestly. So I don't want people to know all my business, and you feel less judged. That's just the truth of it. We feel less judged. It's so loaded in so many ways. So the story I want to share is that I am relatively techie. I am smart enough. I made it through math classes just fine. I never did high level math. I am a social worker after all, but I'm not stupid. I can do stuff. And I really did run our family finances for many, many years. And I was a big Quicken user for a long time. Somewhere along the way, I got out of that. I don't remember why, just life. And then as my business began to get more complicated, and I had actually 2 or 3 businesses going at one time, I really needed to get back on top of my systems for how I was doing things. And I got back into Quicken. And I just kept having trouble. I kept having so much trouble, and I didn't know why, because I had been able to do it before. I still don't know why, but I remember, and I was alone. I had been through a divorce. I was handling a lot of things completely on my own at that point. It was kind of a hard time. And I can remember sitting at my computer and thinking, why can I not get this to balance? What is wrong here? What am I doing wrong? And I felt so stupid. And I got really emotional, actually, that's actually not normal in this particular way for me. but
Yeah.
it was just a statement of where I was. And I was in a mastermind at that point with this coach that I worked with for a long time. And one of my friends in the mastermind was a bookkeeper who I'd seen what great work she did with everybody else, because she was not just a quote, just a bookkeeper. She was more like you're describing your people. Like she was more of a full service, let me help you feel better about this kind of person. And at our next mastermind meeting, I said, I think I'm ready to hire somebody. I'd never had a bookkeeper in my life, and I'd been in business for, good Lord, 15, 20 years at that point, long time. Um, but I was so over it. And I started working with her, and golly, the peace of mind that has come from that. The thing I had to learn, that I think you also referenced this, that a lot of people will have like a CPA or a bookkeeper. They just like, I just hand you all my stuff. You just go do it.
Yeah.
And they
Yeah.
never even look at it. It does not abdicate. It does not mean that you no longer have that responsibility to tune in to what's going on. You do not get to abdicate your responsibility. So she helps me with all that. I still look at it all. I look at every bit of it. And we do have those regular calls and we talk about it through all that kind of stuff. But the thing I want to share is that it is so easy to feel shame, because you are smart people, guys. But like Danielle said, this is probably not your thing. There is a happy middle ground here where you hire a money team who does get it, who not only gets it, y'all, but they actually enjoy it. That's the crazy part to me. They actually enjoy it.
We really do.
So glad there are people like that in the world. I said the same thing about daycare workers. But you know, the fact that there are people who enjoy it and can help you get it, it's like learning a new language. But once you get it, you get it. Your practice is going to run so much better. You're going to feel so much better. And everything's better from there. Everything. So I just want to say that, like, don't feel bad. Get some help and learn.
There's no shame in this.
There's
there
no
really
shame
isn't.
in this.
We've
Yeah.
all been there in one way or another. And don't let that hold you back from getting help, or like we see people who are 3 years behind in taxes, and so it's easier for them just to keep their head in the sand than come out and say, oh my God, I need help to get through this. So get the help. Take your head out of the sand. It's your responsibility.
I was going to ask you if you had a favorite client story or someone that you've known who kind of came from that, this is such a mess and I don't want to tell anybody, to who is in such a better place today because they've learned how to do this.
So my favorite client is actually a client who came to me a few years ago, and her request was, Danielle, I need you to teach me how to run my business at a loss. I was like, super odd request, but I'll take it. And we did what we call a catch up. So we go back to the beginning of the year and we pull in all of their transactions and get a good financial picture. And at the time, this was like November. So we did to that beginning of that January through November. And afterwards, I said, got good news and bad news. The good news is that you're profitable and I don't have to teach you how to operate your business at a loss. Bad news is that you're commingling your business and personal, and we don't have any time before the end of the year to do any type of tax strategies or take on any business expenses at this point.
Yeah.
What I watched this woman do with that information, she became an entirely different person. She had treated that as like a freelancer. Like, I'm just kind of doing this thing on the, I'm just kind of building
gig.
This thing.
Yeah. A hobby.
Yeah. And then when she realized that she was profitable, the entire mindset shifted. I watched her invest in advertising and marketing. She went to every networking event in town. Like, she built that top line of revenue. Once she got the sales rolling in, she kind of redirected her expenses. In that second year, she said she wanted to buy a home. And so we watched her take more of the draws. She became an S corp. She really like focused on her personal wealth building. She bought the home. Unfortunately, her mom got sick right after she bought the home, and she had to restructure her expenses again. She started to pay her team more, and she took a little bit less so that she could keep her business afloat and survive the season of her life.
Yep.
And so she shifted her spending. But do you see how, like, every business, like, we all get to go through all these seasons, but for her, had she not come to me, like literally, had she not asked me to do that for her, she would never have bought that home. Like, she was so far from buying that home, being able to take care of her mother, she would have never seen herself as a confident, empowered business owner. When I see her, she radiates confidence now. And
Yeah.
that's not how she came to me.
Yeah. And you're proud of her.
Oh, I'm so proud of her. She's
Yeah.
local, so I get to see her sometimes.
It shows. I can see it on your face. I love that. I so get that. That's a great example of what happens when you do what you need to do to get a handle on your numbers and understand them. That's great. And have a team in place to help you manage. I love that. Talk about empowerment. That's great. People who are like, okay. I want to learn more. I want to follow you. I want to dig a little deeper into this because I think you have a podcast of your own, don't you? Am I remembering that right?
Podcast is Business by the Books.
There you go.
Go to kickstartaccountinginc.com. There's links to the podcast right there. So kickstartaccountinginc.com. Come book a call. My team is just as friendly as I am, if not even nicer. Like they're even better versions of me. So come book a call. If you want to learn more about the deductions, you can go to kickstartaccountinginc.com/gift. And we actually have a download where we go through all of those deductions that we talked about. So go download that. If you're more of a visual person or like an accompanying visual, definitely download that at the gift page.
kickstartaccountinginc.com.
The ink is really important. They will not let me buy that darn URL without the
There you go. kickstartaccountinginc.com/gift.
Yeah.
To go get a list of the deductions you need to be using. That's really helpful, guys. I encourage you to do that. And I think your podcast is probably a great place to continue learning some of the things that you share with us today. So,
we come on every week to talk about how to use your numbers to manage your business. It's not just about growth. It's about managing. So if you like this topic, we go in every single week.
Well, what I like is that you lower the shame factor.
Oh yeah.
That's what I like. That's the thing that's so important to me. So tell me, Daniel, is there anything I always like to close by asking, is there anything that I haven't asked you, anything that we haven't covered, or just anything that you feel called to share that would make this conversation complete?
I've never heard someone say I hired too early. Never once. I wish I would have gotten help sooner. I wish I would have hired help sooner. I can't believe I was doing this on my own for so long. I can't believe I wore that superhero cape around. Retire this superhero cape. You don't have to do it alone. Business is hard. Like running a business is the hardest thing I've ever done outside of my 2 kids. And there's help out there. It takes a village. Like, let's be a community. Let's be a village together and get you guys help.
Let's do that. I love that. That's perfect. And the story you just told about that woman, what I loved about that, there were lots of things, but one of them was that she took her business more seriously once she hired you.
Yeah.
Right? She took her business more seriously once she saw that it was working and she could do something. So guys, treat your business seriously and treat yourself seriously. And put your team in place. There you go. That's great. Thank you. That's a perfect place to stop. All right, everybody. Thank you so much for tuning in with us today. I hope this has been helpful to you. I hope it's got some wheels turning for you. I love that. I like to poke you a little bit. I hope it's got you thinking. And reach out to Danielle and see what they got going on at Kickstart Accounting. And of course, I love hearing from you too. Tell me what you got out of this. Tell me what this has, tell me what your big takeaway is from here. I really like to hear because this is a hard subject for all of us. Thank you, everyone. Have a great, awesome week. And I will see you. I want to start to say profitable, sustainable week. And I will see you right here next week on the Ideal Practice Podcast. Bye now. Hey, y'all. If this program has become important to you, if Ideal Practice matters, it would mean so much to me if you'd be willing to take just a minute to do 1 or 2 of the following things. First of all, would you follow or subscribe to the show here at Ideal Practice? Following me helps you because you'll never miss an episode, but it helps me as well for all kinds of reasons. To do that, all you have to do is go to the show page for Ideal Practice on Apple Podcasts or Spotify or wherever you listen to podcasts. There, just click on the plus sign that you'll usually find in the top right-hand corner or Click on the word follow that you're going to find somewhere there on that page. Of all the things, this really is the most important thing you can do for the podcast itself. While you're there, it would be extra special if you would be willing to give me a 5-star rating, and even better than that, a review with your own words. Your words matter. And when you write what you feel, what you think, you uplift and encourage others. And I love that. If you want to go a step further than that, take your favorite episode or two, one of the ones that has meant a lot to you, and share it with a friend. Could you do one or two of those things for me? I promise I will love you forever. You guys matter to me, and I value your support more than I can possibly say. Thank you, sweet friend, for anything you can do to help me out and support the show. I'll see you again soon.